Welcome back, everyone. Casey Stubbs and Simon Severino. Part 1 live trading. We're going to make some money right now with you collecting some premiums by selling some puts and credit spreads. Second part, we look at long-term investing and we can analyze fundamentally and technically the best companies that we can find out there. Welcome, Casey.
Yeah, and you know what's the great thing about today is by the end of the show, they're going to know exactly how to find a spread trade and know how to do the risk. And they're also going to learn some amazing strategies for fundamental companies, how to find those great fundamental statistics that they need to make great investments. So they're going to learn a lot today.
Let's do it. Let's look at the markets and start with some live trades. Markets are funny because they're both, VIX is up 5% and markets are also up 0.16. So that's an interesting situation. Doesn't happen very often that the volatility rises and the markets rise. What does it tell you, Casey?
Well, I think it means that volatility doesn't always necessarily mean fear. It can also mean price movement. So if the markets are up in a big way, that can increase volatility and that can make the VIX spike a little bit. That's an interesting factor for today. We got a really good market and the VIX is going up. We'll see how it plays out.
So first part, guys, we want to trade. Let's collect some premium and create immediate cash flow, immediate income. Second part, we're going to look at companies that we want to buy and hold forever. Let's look at the markets in terms of trading. We usually start with going to the watch list. Do you have something already, Casey, that you're looking at?
Well, right now, one of the best trades that I was looking at as far as premium is ASTS. They have a pretty good premium right now. They're trending in the right direction, and they have some good probabilities of success based off of the options chain.
AST SpaceMobile, a company I used to hold. A very interesting company. If they succeed, they can be a 20x in a portfolio, but they are pre-revenue, so they need to succeed first. But as a trade, if we look at the 30 delta, if we sell a put at 65, we get $5.20. Are you looking at more at puts or spreads?
Well, you know, I think the important thing that people need to look at is, and one of the things that they should learn is allocation of capital and probability, right? Because you know that over time, the better ROI you get, the more profitable it compounds. So you want to calculate all of your trades. So I think a spread might be a good way to calculate a good way to go with capital allocation. How much was the credit that you were looking at?
But you just said capital allocation, so you remind me that some people in the audience don't have a money management tool. So let's show them, how do you actually know how much you should put into work right now at this VIX level? So if you don't have a tool, use our tool, strategysprints.com. You can use it for free, 7 days. And you enter the VIX here, how much you have in cash, how much you have in options, and it tells you immediately if you have 6% of your cash to put into options or 3% or nothing. So that's your money management tool. Thanks for reminding me, Casey. And now back to the options, because now you know how much to put in there.
All right. So if we take a look at the January 30th, that's 46 days out. And another little thing that we can teach people is that I like to go out 45 days. That gives you plenty of time to manage the trade and plenty of time to make money. And you get a nice premium. The premium is a little elevated when you go out further. And another benefit is that you don't have to stare at your charts all day because you got 45 days to manage the trade.
We can sell a put at 520 or a $10 widespread.
Yeah, so if we did a $10 widespread and we went for a 665 strike price, 665, and we would go all the way to 655, that is you need $1,000 of capital to trade that. And with that being said, $1,000 with an roughly 70% probability, that's a pretty good trade. And when I run it through my probability calculator, if you take this trade with these, with the probability that we have, it's actually not a profitable setup long term over many trades because your risk can get in the way. So we need a little bit better premium than that.
Also, markets are too wide. It's between $2 and $5. So 2 red flags, we move on. What's next on our list?
Let me see what else I was looking at. Did you have any that you were on? I know we do a pre-trade checklist. Let's take a look at your pre-trade checklist.
Pre-trade checklist says puts, NQ, MNQ, ES, gold futures, AMD, ASTX, which is what you just picked, but it's a leveraged ETF. TSLL, which is the Tesla leveraged ETF, and an ETF APPX, which is on AppLovin, SoFi, Hood, Palantir, Rocket Lab. Rocket Lab is the direct competitor to ASTS.
You know what? They are pretty good. Rocket Lab has got good premiums. They've been showing up on my scanners recently, so that might be one we could take a look at.
Yes, they were having some great momentum. Nothing I would love to hold in a portfolio because they're not profitable yet, but a great trade.
Are they growing revenue? That's one of the things I like to look at. Even if they're not profitable yet, sometimes if they're growing revenue, they can be really powerful.
We are at $58 right now. If we sell a put at 30 delta, we get around 257 for a put.
At what strike?
52 strike at the 30 delta.
52.
You know, maybe people are watching this later. If you're watching this later, the price has moved, you can still go to your 30 delta. That might be then a 54 or a 51, but you can orient yourself by going to the 30 delta.
So what do you think, Simon? Is that a good setup based off of your calculations?
Let's see. 58. Probability of profit is 71%. Too wide for me, between $3 and $5. Too wide for me. I like them tight between bid and ask. Even if it's just a put. But I don't need many trades. I have 120, 155 already working.
All right. Well, then I think what we should do is go to the pre-trade checklist and go with the number one. What's the number one highest ROI setup and see if we can get something that is acceptable there.
So that's a newer one. It's the NASDAQ futures, NQ. We did it only a few times so far. So guys, you are learning live with us. You are in the lab with us. You are in the kitchen. You are cooking.
The learning lab,
us.
the money lab.
So be careful. Let us make the first mistakes before you do them. And we don't go 30 delta in this case. We go 12 delta because it's riskier. There is leverage in here. That's why we go safe. And for a 12 delta, we would get $135 on a put because it's a 22,900 underlying. So that's not a put. We're looking at a spread here. We're looking at a spread 100 wide.
Okay. And so the one of the things with this is it's your probability at the 12 delta from what I'm seeing is 86%. So that's very good probability for 100 wide spread.
Yeah, mine is giving me 95%. Why do we have such a gap?
We might be looking at different strikes. I was looking at the 22,900
Yeah,
and
22,900.
46 days out.
Oh, maybe I picked the wrong days. Yeah, 46 days, 22,900. I get 95 pop.
Mine's 87. But it
What?
could be the difference in the brokers.
One of our brokers is weird. And we don't know which one right now, guys. So ask and bid is much tighter. That's better. And how much? So per contract, what's the max win, max loss?
So the max profit from what I'm seeing is $165 with the max risk of 1,800. So you've got a decent amount of risk there on the spread. And so one of the risks with that on the probability side is maybe you'll win 10 trades in a row and then you have take the big $1,800 loser and you can potentially wipe out all your profit in one trade. So you have to be very mindful of the probability.
Eliminating it from the puts side of things. This needs to go to the puts.
Too much risk on the put, too much capital.
Too much capital. That's 200,000 in capital. That's not a good risk management. We want to stay small. Small. So on the put side, if we do the NQ, according to my pre-trading plan, if we go 12 delta, we invest 658 to earn 130 on average, which is a 20% yield. That would be pretty cool and kind of a normal range for a put spread, right?
Yes. Yes, that actually sounds really, really profitable trade.
Because most of these put spread are between 15% and 30%. So 20, we're exactly in the middle. That's realistic average on a put spread. It's defined risk. You can't lose more than the amount that you see from the beginning. And you can make 20%.
Right.
That sounds
right.
like
And now one thing I wanted to mention too that people would learn about the probability. If it says 80% win rate, 70%, with the way that we trade, where we take profit early, that increases your probability much, much more because the statistics are based on if you hold it to expiration.
I got filled 2 contracts, NQ January 30, strike 22,900, and I received 148. Now comes the boring part of documenting it. and I'll hand over
Yeah.
to you.
Well, I always like to document the trades live or in my videos when people are watching. The reason why is because, yes, it's boring and I could cut it out and people don't want to see it. But at the same time, I want people to realize how important it is that you just got to take a minute. It doesn't take that much time, and it's part of our processes and our habits and our disciplines. And, you know, discipline equals freedom. And if you're going to take the time to want to live a better life and to be successful, you're going to take the time to do things the right way. Otherwise, you're going to crash and burn. And we got to know when you're dealing with money, you got to know what you're doing. This isn't a guessing game. This isn't like, okay, we're going to go in and play the markets. We're very strategic and we have a plan and we're following the plan and we adjust and adapt. And if you don't know what you're doing, you can't do that, right? And so a lot of people don't take the time to do this extra step, but they should. And Simon knows, he's like me. We don't like doing it either, do we, Simon?
It's boring as hell, but we have to do it. Otherwise, how do we learn? What's next?
Well, we took our live trade. Let's talk about what happened last week, right? Because you made a couple really nice trades, and I think you closed all of them, right?
I did. Let's look at them. 1 second. Let me finish this. I think I made a mistake.
Oh, okay.
I fat fingered, and instead of making it a spread, it's now a put.
Okay.
And so that's too big for a put.
So you had two contracts?
2 contracts sold as a put.
Okay.
So I'm just closing it quickly.
That's a good idea. Are you closing both contracts and you're going to redo them?
Yeah, just close them. Maybe I take a little loss, doesn't matter. But if I don't feel comfortable with something, so I'm out at the same price. If I don't feel comfortable, I get out. So we wanted to do a spread. Instead, it became a put. Maybe
Right.
because doing it live is a bit less focused and a bit more distracted, obviously. So we go back. We closed it. We go back and make it a put and Q.
Okay. That's good.
46 days.
Yeah.
And it doesn't matter if we win a little bit or lose a little bit or get out at break even. It's important if you don't feel comfortable, just get out.
Right. And if you make a mistake, you need to fix it quick. That's really important too, because a tiny mistake is better than a big mistake.
Yes.
And tiny mistakes can turn into big mistakes if you don't manage them early.
Yes.
That's a good takeaway lesson.
143. So same delta, 12 delta. We can sell the 22,900 and buy 100 lower. That's a spread. Now we have a pop of 93%, probability of profit 93%. Ooh, look at this bid-ask spread. It's between 4 and 12. Red flag. I'm out. So let's go to your next question, which was, which of the trades of last week are on, which are off? Let's go to the puts first.
Okay.
We closed QS and made $41. I closed gold and made 320. Closed IBIT, made 35. Closed ASTX, which you picked today, and made 160.
Good.
I closed our ES trades, the S&P E-mini futures, made 574. Lost money on App X, minus $60. Rocket Lab made us $75. Another ES made us $324. Now you see why the ES is our favorite. It's printing money. And we have still an open one, an open Palantir, open Silver. Oh my God, Silver was doing so well before. Open Rocket Lab, open Arista. Those are the puts. And we have also an open Netflix, 2 open Netflix, 1 open dashboard from weeks ago, which still is doing the wheel thing and is down big. That's where we are right now in terms of puts. Spreads, we closed NVIDIA and made $300. We closed the NQ spread, the one that we wanted to start right now, made $80. We closed Google and made $300. We closed Palantir, made $750. And we still have on as a spread Apple, Google, NQ, NVIDIA.
And you just opened another one on the NQ, yeah.
Yeah, I didn't because it
you
was
didn't.
a wide spread.
It was too wide, okay.
Too wide. Broadcom,
Got it.
Meta, and NQ. So we have multiple NQs running already. And now you see why I'm not eager. I don't need many trades. I have a lot of trades on. I don't need to start many trades right now.
Yeah, and you know, that's the thing too, is that the market's down a little bit today, and it could continue to drop. And so if it keeps going down, you could get an increased VIX and get some really good premiums and catch it right at a nice time and make some good trades that way. So patience is a really good thing to learn too.
And since the market is down and our trades are on, I don't need to start many trades. I don't know if you need to start a lot of trades. We can do that. Or we look at some companies that we want to buy and hold and go through their charts. We could chart like 8 or 10 companies and look at which ones have good entry points. Because one thing is identifying great companies. And over the last 12 years, I've become decent at that. But it's another ballgame to find the right moment to buy, which I am terrible at. I bought Ferrari and Harvia this year, which are amazing buys. I'm really proud of myself that I did buy them, but they're down 20%. So maybe we can get a little bit better at finding entry points.
I think timing in conjunction with rock solid analysis is a great formula for wealth. And so I'm really excited to learn your process. You know, it's good to have both of us here on the show because I'm pretty good at the timing and the chart stuff, but I'm not as good at deep dive fundamental analysis. So I'm actually really excited to learn your step-by-step and your grading system, and all of that is so good. I think it would be great for everyone to learn it. And I got a little update for the audience. Something new that we're now allowing this week is I noticed that there's chat available. So if you guys have any comments, this is the first week we had chat on. So congratulations, Simon, for getting that up. And you guys can ask any questions along the way if you want.
Now I'll fat finger even more. Now, if people ask me questions, I get even more distracted when buying. But I will try my best, guys. We're here for you. So, and for us, right? Everybody wants to learn here and get better. We do this for you guys. We do this for us. Everybody should be accelerated on their learning journey. That's why we do it. So VIX is up 9%. Markets now is turning red, -2, -0.18. These are the 10 companies that I've prepared because they have passed my incredibly hard test. And so those few, I can show you the test. Members in the Sprint Club, they know the test. So they have to pass these questions. Are they essential or a nice to have? So does the world really need them? It's not just, oh yeah, it's a nice company, it's a nice product. For example, Duolingo is a nice product. I like Duolingo, my kids use it, but it's not essential. So Duolingo could never make it here on the list. Never. Same with
Right.
Netflix. I love Netflix. I use Netflix. I was watching Netflix yesterday. It's a fantastic product, but it's not essential. It's really hard.
If you have a TV addiction, it's essential.
Yeah. Well, yeah, but not really, right? Not really. You can,
Yeah, I guess you'll just go through convulsions and be like, I need my show.
yeah,
Yeah.
exactly. Exactly. So is it essential or discretionary? Nice to have. It gets 10 points if it's absolutely essential, like the world cannot operate without it. And then the current mode, is the mode expanding or not? Because if you have a current mode, that's great, but if it's shrinking, that's terrible. So you have to look at the mode trend if you want. So I'm looking at mode trend. Is it
So can I
expanding or
ask some
not?
questions
Yeah.
regarding this scorecard? I really love it and I think it's good, but to me, it seems like there's a little bit of open opinion on how you score it. Like one guy might say the mode's a 7, the other will say it's a 6. Like, do you have strict criteria on how you grade it, or there's a little bit of leeway there?
Both. So for each of them, there are 10 like items on how to grade it. So there is a quantified part, but still this is all subjective. This is not hard science. This is not hard science. It's a mix of arts and science because it's in the end, it's people doing stuff. So what's a company? A company is 700 people doing something. Right. And then on the other side, there are other people saying, I need this. So you have people doing something for people. So this can never be a fully quantified 100% objective process. There is subjectivity in it, which makes it so interesting because part of it is psychology and business strategy. That's why I love it, right? That's why I'm passionate about it. And on the other side, it makes it hard to quantify. So this is not a hard science. And if I do the same exercise in the same week, sometimes I get a 78 for Arista and sometimes a 76, and I'm debating with myself. So this is grosso modo. It's half
So I'll
art,
ask
half
you
science.
as we go through. There are some of these though that are a little bit hard edge, like ROIC, right? ROIC is like it's the numbers and it doesn't lie.
Yes and no, because you can look at GAAP standards or non-GAAP accounting. So each one of those has a ton of lies in there and a ton of things that are fuzzy.
Okay.
But there is still a logical process. And what we want is better decisions. So we want to really think in first principle to, if you can explain it to a 7 years old, now you're onto something. And what this helps you is getting line by line into understanding the company. It's not hard numbers, but it's the process for understanding, turning each stone so that you have seen the whole surface of a company. So then it's balance sheet, EPS acceleration, net margins, the ROIC profile, but not just the ROIC profile, also the reinvestment rate. How much do they put into growth CapEx versus maintenance CapEx? Capital returns, because you can have a great company, but they don't return it to you as a shareholder. And then valuation, because you can buy a fantastic company at the wrong price, at the wrong moment. This is where we have to go to the charts.
Right. Yeah, it's a good combo there to throw in some charts because charts is hard data. Like it doesn't lie because if the price is going down, it's going down. You can't
Yeah.
lie about that.
Yeah. And now if we look at some of our favorites right now, we have Arista Networks with 78, Lindy with 76, C Limited with 72, AppLovin 69, dLocal 68, Shopify 67, Mercado Libre 66, Grab 60. Now we could go and chart them and look at, okay, is there an entry point? Is any of those jumping off a support resistance? as a support line. So is it bouncing? Because it's a down day. Let's have a look.
Yeah, well, I think that's great. So yeah, let's go through a few of them.
I was looking at Linde. Maybe we start with Linde. I'm on the weekly. And I was looking for times when they had a drawdown, a strong correction, like in March. This was the big crisis, the big financial crisis at 09. They did fall 44%, but they never stay there very long, right? Then they did fall down another 30% in 2020, and they are right now, they did fall 17%, and I think they're bouncing off. Now there is a macro side, so they're below the 200-day moving average. Let's clean it up a little. If this is the 200-day, they are below it, but they kind of bounced off. There is one macro uncertainty. The whole industry, which is industrials, the whole sector is in a recession. Now, I think it's the second year that industrials in general are in a recession. So they have some problems on the broad side of things. But then one part of their business is actually accelerating. And that's everything to do with electrification and data centers. So I think they will have a good 2027. I'm not sure about their 2026. So we have time to buy these guys. But if we look just at the chart, what does the chart tell us?
Well, first thing I see is if you look at the 392 blue line, that's a support level, right? Because it previously topped out there about July of 23. And so it's right back to a previous price. So that's support. So that's really important. The next thing I'm noticing is that the 200 moving average, which the one that you have looks different than mine.
Oh.
On mine, I'm seeing it bouncing right off of the 200. Okay, so with that being said, it's got a really, really nice looking, what they call a morning star setup, a morning star on the candles, a bullish price engulfing. The weekly candle bounced off that 392 and went up higher. So to me, it looks like it could be bottoming out, and it could be a potential time to start really getting serious about watching this.
Interesting. And so what does it tell us about the 200-day moving average, that you can have so much subjectivity in there? How many indicators are on TradingView have the 200-day? Which one are you using?
Well, let me go through I'll look at the exact thing. I'm using the simple moving average with a 200-day moving average. And I'm on a weekly chart, and it's showing it bounce right off the price. So I don't know, maybe if we look at your settings, which one are you using? Because sometimes there's the 200-day SMA, I just saw it. That's the one.
Yeah, but you know what? When I see these kind of things, the first thing that it tells me is this is highly subjective territory. And so
wait, go up. I think there's one that see how it says there's different people that wrote those?
Yeah.
I think those might be they're custom formulas.
Of course, yes.
Yeah.
So there is hundreds of 200-day moving average. What it tells me is this is subjective. Don't even look at it anymore. It's noise.
Okay. I mean, in the same way that we said that some of those numbers were subjective in the fact of your fundamental analysis, technical analysis is the same way. We get one chart expert that says, "Oh, this is bullish," and then another chart expert saying it's bearish.
Yes.
So what are we to do?
Yeah, it's important to discern, right, the subjective from the objective. The most that we're doing here is subjective. The only objective part that we discussed today was the VIX change, because the VIX is the only thing that mathematically will revert back to the mean So if it's at 60, it will come back to 24. If it's at 8, it will come back to 22. That's the only objective reality that we have. So when you have a very high implied volatility, you can expect it to come back down. Everything else is very, very subjective.
Yes. And I would say, though, with my subjective analysis, I would say that this has some very good upside potential. I'm looking at that red line on top, and I'm thinking a very possibility once it gets the bullish momentum, because I can't predict the timing on when that happens, but once it happens, I think we have a price target of 550, 530, and that's, before it starts to retrace again. So that's a nice move for someone to try to capture as an investor.
Now, what's funny, your price target is similar to something that I shared a few hours ago on here. Let's go to Linde. In the Sprint Club, I shared a price target by Morgan Stanley, which is 495. So that's slightly below yours. And there's the whole report in there, 495, which is here in the middle of our channel, because they look at 12 months. But if we go out another month, you guys are reaching the same conclusion.
Yeah. And those guys, they get paid $10 million for their reports.
Yes, they get paid. That doesn't make them super, super, super accurate. They don't nail it always.
No,
But
it's like the weatherman.
No, yeah, but they're giving they're giving effort, right? They're putting in hours in research.
They have systems too. They have processes and systems, and they, over time, those probabilities do work.
Yeah. So Linde looks good here, right? And I mean, just looking at it from the far, look at this chart. That's just a very reliable defensive company to own. It's going up since 1993. That's the definition of a reliable, steady compounder.
Yes.
AppLovin. I was lucky with AppLovin. I entered here. And I really like it. So quick look at the fundamentals. It got a 69 because it has 10 out of 10 EPS acceleration. It's really rare to find that. 10 out of 10 net margins, 9 out of 10 ROIC profile. This is a beast. A beast. And people were negative about it because they said, no, you're competing against Google and Amazon, you can't win. Well, it's showing that it can, that both can win. Market is big enough for both to win. I like the founder. He's still involved. The CEO is still the founder, so he has skin in the game. He's a fierce guy and kind of unstoppable. Continuously innovating.
He's like you.
Executing.
He's like you, Simon.
I like to hear that.
You know what? The chart looks pretty good. So I'd love to hear about some of the your fundamental ideas on the company. But the chart looks great because it's bouncing off the 10-period moving average. The really strong uptrend right now. It looks like a lot of upside potential. Everything is looking green on it to me.
I love AppLovin. I wrote a very long piece on AppLovin because not many people know it. And so you can read it up. I'm writing a lot recently. And guys, this is at theinvestingshow.beehive.com. And there is AppLovin here, October 7th, a very long article on the details of this company and a competitive analysis and evaluation. I like AppLovin. I'm happy that it's one of my bigger positions in the portfolio. I'm not adding right now. I don't think it's cheap, but it's strong. It's a company that can run for 10, 20 years. What else do we have? Harvia, the leader in sauna, which people think has sentiment is kind of negative on this, but I couldn't be more bullish. They're firing on all cylinders. They can add geographies. So they're in Finland. They added the US. Now they're adding Japan. In terms of products, they're the leader in sauna. They can add steam sauna and they can add infrared sauna. They can digitize the sauna so that, you're in your car and say, hey, warm up the sauna because in an hour I'm home and I want it at this temperature. So they have so much more runway.
So, Simon, you said they're like from Finland. And so I'm very not aware of this product, never heard of it. And so I want to talk about Essential. I don't even really know what a portable sauna is. Like I know the sauna room, you sit in there, you sweat, you wear a towel.
Yeah, normal sauna.
Is that it? That's Essential? Like how does that become Essential? And I'm like really, really lost on this one.
Not essential. No, this is not essential.
Oh, it's not Essential. Okay.
No, it's just a sauna, normal sauna. And so I have two companies that have passed the test even without being essential. So if you're not essential, you're scoring very low in the first line. You have to make it up with the other 9 categories. You have to be impeccable.
Do you have one of these, just out of curiosity?
I have a sauna. It's not from Harvia.
Okay.
But they are the leader. Harvia is the leader. And they do both just the parts, like only the heater, but also the whole sauna. Saunas that you put in your apartment, in your house, or in your garden.
Are these electric?
Sure.
Okay.
And they have all kinds. Yeah, they have also.
They look cool. Like I've never seen one of these, but they look really cool. Like I want to look into them now.
They look cool. And then there is a fancy, more luxurious sub-brand that they just bought. And that one is also going really well. And just to give you, so there is almost, because they are from Finland, there is almost no coverage on them. There is no analyst covering Harvia. But if you go to Costco, you can buy a Harvia sauna right now.
Wow.
So Costco always wanted to do that because the trend for sauna in the US is going up, especially in this season, right? But also last December, it was picking up. But saunas are so big, it takes so much space that Costco wouldn't do it. But now Costco is doing, and that was telling me something.
Mm-hmm.
When you are Costco and you take the risk of using up, 10 square meters, 20 square meters to have an item, then you think there is a ton of potential because you could sell 10 items on that with that inventory space. So Costco believes in sauna, and Costco, I think, are some of the smartest.
They're amazing. Costco's amazing.
Absolutely wonderful, right? And they have the data. They know what sells and what doesn't. So yeah, I believe in Harvia. It's one of my biggest positions in some weeks.
Now, is this on the U.S. stock exchange, or do they have to get another one? Because I was just looking at the symbol and it wasn't really popping up.
Good question. I buy them in Finland.
Okay.
So, good question. Are they even on the New York Stock Exchange? Let's find out.
Which is an even bigger opportunity then, because if they're the possibility, if they're really this great, they'll get listed, and if you get it early, that's
so I buy them on the Nasdaq Helsinki exchange. That's HEX, but you can buy them also on the London Stock Exchange. So there is a few, but they're all in Europe.
Okay. Yeah, because I don't even see that on my chart because I don't like with my broker. OMX Hex. Yeah.
You can buy
Okay.
them
That's good
only.
information.
Yeah, you have to buy them in Europe. And next week, we can go over the others: Ferrari, Visa, Arista, Shopify. Shopify is such an amazing company. FICO, C Limited, Amazon, Grab, Mercado Libre, DLO, and Exxon. Those are the companies that I would love to hold. The more the better, the longer the better. Right now, I'm very bullish on these companies long term. And next week, we can have a look at them. And you guys can let us know if there are other companies that you want us to have a look at, both from the charts, where Casey can look at the charts, or fundamentals, where we can look at the what's going on in terms of earnings and cash flows.
Yeah, I think that's a great opportunity for somebody and good opportunity for us because somebody might have a gem that we don't know about. So bring them to us.
Absolutely. So thank you very much, everyone. We are here next Monday for you guys, live trading again. First part, we will do some live trades. Second part, we look at hot stocks in the moment that we want to own and possible entry points. Thank you, Casey Stubbs. Where can people subscribe to your channel?
Freedom Income Options on YouTube.
Freedom Income Options, guys. See you next week. Keep rolling.
Avoid trying to do thousands of things that doesn't work. We have 274 templates for your business success. Reach your ambitious goals with one-on-one sprint coach. We double your revenue in 90 days.
What if your business would run well even when you are on vacation? Discover how 1,600 business owners have regained their freedom using the Strategy Sprints blueprints. How they enjoy living their dream and watching their business scale. Get the exact checklists they use to go from stressed to fulfilled using the Strategy Sprints method. Order your copy of Strategy Sprints 12 Ways to Accelerate Growth for an Agile Business on Amazon today. And if you love it, leave us a review. For more information, head over to strategysprints.com.